Alright everyone, welcome back to the channel for another update on Kadena. So, in the past couple of days, Kadena's been nicely moving to the upside. It's showing more strength now than it has since I started covering this at $6.50. On the daily time frame, it's even up 9%. So, what I want to talk about in today's video is, am I still expecting a final leg to the downside? And where would I be planning on buying? I'm going to talk about scenario A. If I'm wrong about the next leg to the downside, where would I capitulate and buy in on Kadena? Or scenario B, which I still do find is more likely, where would I be buying if we do get ready for that final capitulation to the downside? And more specifically, when exactly I think this is going to be coming into play. So with that being said, let's jump right into today's video. Like I said, we are pushing to the upside on the daily time frame. It is looking very, very healthy, and why I say it's moving stronger than it previously has done is because it's had a nice run to the upside in the EMA ribbons, and you might be looking back and thinking, well, we've had, much more euphoric rallies to the upside than this, and that would be true, but these rallies come after major capitulations, and they come back to retest the daily EMA ribbons. However, what we've done now is we've basically, if I take a support range, we've basically been lollygagging within this huge range for a prolonged period of time. But a lot of the data was traded within this range, and you can see this over on the VPVR specifically. From these levels here, the most amount of data has been traded, and this makes sense because when we do look at the price, you can see we've more or less been lollygagging underneath the daily EMA ribbons for a prolonged period of time right now. Because of that, the EMA ribbons have capitulated down to the price action, and when the price action had the next run to the upside, which is what we're currently witnessing now, we're witnessing a huge run up into the daily EMA ribbons. However, a lot of the momentum indicators are very lackluster at this moment in time. You can still see this is what we're celebrating. There's really not a lot of momentum coming into this market whatsoever at this moment in time. And you might be looking at this and thinking, well, we've had a beautiful run to the upside, but when in doubt, zoom out. Or for this example, I'm going to zoom in and show you that the price that we've moved up to today was simply the price that we were at on the 26th of June. So it's been about 3 weeks or so, and we've once again just returned to this level. So at this moment in time, I'm not saying that we're going to get stuck beneath this level, because I definitely think we can have continuation, especially if Bitcoin continues to move up to my price target of 23,000 in the short term. However, I'd definitely be worried about getting over exuberant and FOMOing into Kadena at these price targets, because I do just think this is a normal rally. When you are in a bear market, you do have tons of these rallies before you do find the final capitulation level. Now, what is interesting about this is, just like I talked about in the last episode, I think this was 3 or 4 days ago, we were talking about Kadena's volume profiles on the VPVR and the fixed volume profiles. This was the most important range for Kadena to break above $1.71. We have managed to push above these while we are having a rally into the daily EMA ribbons, the second most important region. And I'm not going to say anything else apart from this one, because there's really not a lot of volume profiles above this. If we do start pushing above this level, flip the EMA ribbons, we're basically going to have clear skies above our head for a huge move to the upside, if that is what the markets do decide to do. So this is basically the final level over on the VPVR. The next major cluster is coming in at $1.79. You can basically see, we came up into this today and we had a little bit of a struggle to get above this region. Nonetheless, we are pushing up quite nicely on the daily time frame. If we do look at some of our momentum indicators, we've already talked about the daily squeeze one. Like, once again, even if we just flatten it so we can encompass all the data points in here, you really can't even see a lot of momentum happening over on the squeeze moment. It makes a lot more sense when you look at it at this chart, because you witness the price action, you have these exuberant rallies, but more or less we are just trending sideways at this moment in time. And this is demonstrated because we look back at the squeeze moment, you've got these huge swings from bullish to bearish, bullish to bearish, bullish to bearish. But quite recently, it's just been very lackluster. Like, we've more or less just been trending in the exact same range for a very long period of time. So I would not say at this moment in time that we are exceptionally bullish. Once again, we've had to zoom out to show you that these are what the previous momentum shifts over on the squeeze one are. And when we are looking at this, you can really not see the momentum that is coming in at this moment in time nonetheless. So Looking at the money flow indicator on the daily time frame, this actually has a lot more room to run to the upside. So once again, I wouldn't be surprised if we are able to roam free on some of the price action for the altcoins within the next 9 to 10 days. I'll talk about why that time frame specifically. The MACD is heading up very, very strongly. Now, you can argue this two different ways. In my opinion, my first thought on this was, this is overextended because, you know, this has come from a region all the way down here to all the way up here, and it's almost at the heart line. Now, you can argue that we are still below the heart line for the MACD, and subsequently we are actually technically, at this moment in time, once again, technically we are oversold because, you know, we're beneath the heart line. It'd be like the same with the RSI being beneath 30. Even if you think it's going to go lower, it is technically oversold at that period in time. So from a technical perspective, the MACD is oversold. In my opinion, you know, looking at this, we've run up very, very, very quickly without a lot of volume coming in to support this trend. So I would definitely say something like this could happen. We've got a major, major run up, lollygag, capitulation, and I think this is definitely going to be in play over on the MACD. The lower time frames also tell a slightly different perspective. A lot of these are different ranges. So on the money flow indicator, quite recently on the capitulation, we've geared up enough momentum for a move back to the upside. Squeeze momentum looks like it's got a lot of room to move up as well, and the MACD heading up very, very strongly. Nonetheless, the histogram is backing this up at this moment in time. However, let's talk about the bearish implications over on the chart. Before I do, once again, get to the meat and bread of this video, where I want to say, hey, this is what I need to see to become bullish. Either way, if we break down or if we break up, I'll let you know where I'm planning on buying. So looking at the volume, there's like no volume coming in supporting this uptrend whatsoever, and this is the same with most cryptos. It's the same over on Bitcoin as well. Like, you've got a good amount of volume coming in on the daily, but nonetheless, you know, we look at the line of best fit and volume is exponentially moving to the downside, whereas if you look at something on a higher time frame, you know, once again, we don't even need to switch over to Heikonashis. You can see bearish clusters are basically what are running this market right now. Oops. And if we do look at the weekly Heikonashis for Bitcoin, it's finally switched back to green over on the weekly, which once again could mean that Bitcoin has another leg to the upside. Before we do break down, green volume coming in for the first time in a very long period in time over on the weekly Heikonashis for Bitcoin. So I don't want to say that we can't have another leg to the upside, because I definitely do think it's on the table. I do just definitely think that we should be cautious until we do have a confirmed breakout. So what would I need to witness for Kadena in scenario A for me to become bullish and subsequently buy back into the market? Well, I've basically been saying this since I started covering Kadena. I believe this was 665. People asked me to cover this as it was breaking down from this asymmetrical triangle, and this is when I first started making videos over on Kadena. You can go check that over on the 8th of April. It may have been like the 9th or the 10th, or it may have been the 7th. Nonetheless, this is just an approximate range when I started covering it above 650. So from where we were at 650, you know, if you're a veteran of the channel, you would have heard me say this 1,001 times, but I've been saying things like, you know, the trend is your friend until the end, until you flip bullish over the daily EMA ribbons, then nothing has changed. And even after this massive pump to the upside, since I've been covering Kadena, we're still 73.33% to the downside. So being patient, even if, you know, my next leg to the downside doesn't happen, let's say we flip bullish over on the daily EMA ribbons, have a confirmed breakout, I'd much prefer to buy a confirmed breakout of this range rather than just, you know, DCA. The people who DCA'd all the way down got slaughtered, and it will take them a very, very long time to even break even, as Kadena tries to push up back to these levels like 650 when I started to cover this. So once again, I'm really not worried. I don't feel FOMO if it's moving up, because once again, I've been bearish on this since over 650. So if this breaks the upside, if I was wrong about the next leg to the downside, it is what it is. It's, you know, for example, it'd probably be like 65 or 70% cheaper after we break out than when I originally started covering this. So in scenario A, this is what I'd need to see. I'd need to see a solid flip above the daily EMA ribbons. I'd need to see it come down and back test it and then push back above the invalidation point. So let's say something like this happens. Let's say this is your invalidation point. You come up, once again, these are just lines in the sand. You can overshoot this before you come back down. You cannot overshoot this before you come back down. This is just a rough draft. if we break to the upside, come up to, let's say, this would kind of make sense to me. This would be a nice invalidation point. So let's say we break up to this area over on the VPVR at $2.25. We break above the daily EMA ribbons and we come back down for a back test of them. We successfully back test them. And then this is the most important thing. A lot of people would buy at this point, but you know, there's been multiple times where you do something like this and you have an M pattern after a lower high. For example, you know, we did something like this over here. We actually never came back to back test it, but if you don't have a run up to the upside, a back test exactly on the EMA ribbons without capitulating and then moving up, you need to break up, back test them on the dot, and then take out the invalidation zone. If that doesn't happen, then I can't be bullish over on Kadena. And you know, for example, we could have seen this over here where you had a break up, a back test. When we back tested, we actually pushed back up to the upside, so people probably thought that was the confirmed back test, and then we M'd out, broke down. Here you poked your head above it, broke down, poked your head above it, broke down. You actually came back up to the top, M'd out from this, broke down, tried to poke our head above it here, broke our head above it here without a back test, broke above here without a back test, broke above here without a back test. So every single time, literally since this flip bearish, so the EMA ribbons have been bearish since the 18th of December, since $12.43. So once again, I can't take credit and say, you know, if I was sitting on the sideline since 12.40, I didn't even know about Kadena back here. I was making updates on this at 6.50, but nonetheless, if you did know about Kadena back here at 12.40, you could have literally said, okay, I have a trading plan. That trading plan is to follow the trend. I will wait for a daily flip of the daily EMA ribbons, wait for that confirmed breakout, and then that is when I finally decide to buy. You could have literally been sitting on the sideline since 12.40. Like I said, people asked me to cover this. I first discovered this round about the 660 region. This is when I covered Kadena. I told you it's bearish, it's going down, and every single time I've made many videos saying, you know, don't get out of bed for these lower highs, and I've made videos like this over here, over here, over here, over here, over here, over here, and over here. And I also made a video about this over here, but nonetheless, you can see in the macro time frame, we've come right back up to this double top region. We're still showing extreme weakness in the higher time frames, but like I said, I will not be, you know, I'm very malleable. I'm happy to take in new data, and if scenario A happens, we break above the daily EMA ribbons, we have a successful back test, we come back, break out the invalidation zone, I'd be happy to admit that my final capitulation to the downside was wrong, and subsequently I would be buying after the confirmed breakout. Once again, this is a rough draft, but if something like this happens, I would be buying around about the $2.25 region. Now, once again, I will keep you updated on this. Don't just set buy orders for $2.25. Do your own research. If a scenario like this happens, it's a 66% discount for myself. Since I started covering this crypto, I'd be very happy with that. Nonetheless, I don't think scenario A is going to happen. I don't think we're going to be able to break back above the daily EMA ribbons. I'm not saying that we can't have a fake out of them because, you know, once again, we're in a very tight proximity of these previous highs. I think with enough momentum, we could definitely push back up, potentially even have a huge run up to 220, 225. But when you come back down for that back test, if you do not hold it and you slip beneath it once again, I will once again be screaming, we are going down to these lower price targets. If you're a veteran of my channel, you'll know many times I've mentioned these price targets. There's a lot of confluence down here at 86 cents. There's a lot of volume profiles, a lot of previous resistance, flip support. There was quite a built out range over in this region, previous resistance, flip support. This was a accumulation range before we did break above this. So there's a lot of pivotal areas around about 85 cents, mainly correlating to volume profiles. I've been talking about 88, 85, 80 cents for a while now. If you've been watching, you know that. $1 as well. This is not only, I think I might have, unfortunately TradingView deleted all my charts, well, not all of them, but for some, actually I don't think TradingView deleted it. I think I reset my charts when I was doing a video on the volume profiles, and I forgot to reset it back, so I lost all of my previous chart history. So I had to go back to my previous videos, look at my videos. I think I looked at this video and just copied some of the key info from my charts. But nonetheless, round about $1 to 101, so $1.01. We have a 1.618 fib. $1 is also a massive psychological level. So in my opinion, Kadena is very likely to come down another 42 to 43%, all the way back down to our $1 region. And once we come down to $1, I will start DCAing. If we do come down to lower price targets like 90 cent, 85 cent, 80 cent, I will also be buying in those ranges. So this is basically what I see playing out for Kadena. While yes, in the lower time frames, it's very, very likely that we get continuation. And I also wouldn't be surprised if you do push above that $2 mark, breaking above the daily EMA ribbons. It is all in the retest. Once again, if we look back, you could have got out of bed for any of these flips of the daily EMA ribbons. But if you did not wait for the back test and you bought thinking it was a breakout without a confirmed retest, then you got slaughtered every single time. So I'm definitely thinking something like this is going to happen, where this is my most likely scenario. Like, I don't think Kadena is going to roll down from where we are right now and just go straight down. I think also, I'll talk about this as well, because in the next 9 to 10 days, we've got our next FOMC meeting. In 9 days, in the next 10 days, we've got our GDP results. I think GDP is going to come back negative. In 10 days, we're going to be in a confirmed recession. That's going to slaughter the markets. In 9 days, I think the Fed is going to be raising the interest rates once again. So we can either lollygag for 9 days, or we can break down in the next 5 to 6 days or so, a couple of days before the FOMC meeting, expecting that huge 100 basis point rate hike. And a lot of people seem to say, you know, this hike might be priced into the markets, and I wouldn't necessarily disagree with that. But what I would disagree on is the fact that negative GDP, meaning if we get negative GDP in Q2, we'll be in a confirmed recession. That is not priced into the markets. Like, you know, Bitcoin at these prices, this is a standard this is a standard bear market. This is not pricing in a recession. So subsequently, within the next 9 to 10 days, we're going to find out, is the Fed backpedaling, and are we in a recession? If the Fed backpedals and they don't increase the interest rates, if GDP is positive and we're not in a confirmed recession, and finally for Kadena, if we do break above the daily EMA ribbons, back test them and smash through this invalidation zone, I will buy the dip on Kadena. I will go very, very heavy on Kadena, buying a large amount of these altcoins and many other altcoins. If that is the case, that is once again scenario 1. I find scenario B that, you know, once again, everything we talked about in this video, negative GDP, confirmed recession, FOMC increasing the interest rates. I think this is all going to bring Kadena down to its prime DCA targets round about this green box between $1 and potentially as low as 80 cents. That is still what I see coming into play for Kadena. We've got a very, very long way to go until we can argue that we are bullish. But once again, lower time frames, would definitely not be surprised if we do move up over the next couple of days. So when I am saying I find it more likely that we're going to go down, be prepared for a move up. I find it very likely Kadena is going to touch $2 in the short term before we get any kind of decision. Now, once again, this is the most important part. If you've been watching my channel, if you've been watching me cover Kadena since $6.50, and you've been very, very patient, you know, pat yourself on the back, congratulations, we've got a massive discount from where we are right now. But if you've been waiting all of this time and you're starting to feel FOMO kick in, I definitely recommend, or this is what I plan on doing personally, another 9 or 10 days of waiting. If the FOMC is positive, if the GDP is positive, then we could definitely see a huge turnaround in these markets. And subsequently, it's not like Kadena is going to go to $6, $10 in the next 10 days. I think patience will pay off, just like it's been paying off when I've been sitting on the sideline for Kadena since all the way back here in April. So that is all I've got for Kadena today, my friends. I have missed making these altcoin updates. I have been busy. One of my friends came back from Saudi Arabia over the weekend that I haven't seen in over a year. So, you know, took the weekend off. If you do want to know what I've been doing over the weekend, be sure to head over to my Twitter. It is linked down below, or if you do click on my YouTube, you will find the account for it over here. So if you do want to follow me over on Twitter, once again, see what I've been up to over the weekend, be sure to click over on there. But regularly scheduled programming is back, my friends. It's good to be back. Let me know, what do you think? Do you think the bottom is in for Kadena? Do you think scenario A will happen? We'll blast above the daily EMA ribbons. And within the next week, everything's going to lay out in favor of a bull run with the FOMC and the GDP. Or like myself, do you still find it likely that we're going to have one final capitulation to the downside before the bottom is in? That's all I've got for you today, my friends. And as always, cowboy out. Peace.